Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick. Welcome back, everybody, and to all my loyal viewers out there who have been asking where I am and what I see going on in the markets. I know it's been way too long since my last video, but today is a very important video for me to release because I think we are finally set up for a market correction, maybe a 5 to 10% pullback, ending what has been an unbelievable bull run over these last 5 months. I'm going to jump into some charts here shortly and highlight why I think now is time for us to take some caution, possibly go short in the market. But if you haven't taken any profits yet, now is probably the time so that you can buy the stocks you love at lower prices 4 to 8 weeks from now. As always, this video is for educational purposes only. With that said, let's jump into the charts. All right, everybody, we're going to start off by taking a look at the DeMark indicators, combo and sequential on a monthly basis. I know this chart is a little bit of an eye chart for everyone, especially if you're looking at your mobile, looking at this on a mobile device. But I want to highlight what we have going on. You'll often in my past videos know I've looked at daily and weekly combo and sequential indicators, but when we get monthly and weekly that line up, it can highlight a major trend change is in store for us in the future. Because you do not get DeMark 13s on a monthly basis very often, and that's what we're setting up for right now as we're closing in on the end of the month of February. I wanted to do this just to highlight where we have alignment and what has happened in the past. So if we look back at 2018, sequential is in the red 13s, combo is the purple 13s. You'll see the 2018 pause and decline in the markets. We had DeMark 13s, both sequential and combo, across the S&P 500, which is on the top, NASDAQ is in the middle, Dow Jones is at the bottom of this chart. You can see here we had market pullbacks. And then, as we moved into, here was COVID, we had our drop, and we moved higher. We continued to move higher until, I'm sure everybody on here remembers, the end of 2022, which started a market decline. This aligned perfectly with DeMark 13s on a monthly basis. We did not get the 13 using the version of combo I'm using here. And then if you look into where we are today, we already have two 13s on the Dow Jones. The NASDAQ does not have a 13 that's quite ready yet, which is surprising with how much we've had a run in the NASDAQ, it feels like here lately. But we did get the 9 perfection 2 months ago, which means we should see a decline in the next 4 months. And then here right now in the S&P 500, we're about to hit the 13 for the month of February. And we already have a sequential 13, which is highlighting we should be looking at caution in the market on a monthly basis. This is highlighting what we could see in the monthly basis. Let me jump over to weekly so the charts are a little bit easier to read depending on the size of your device. And this is where the key is so important. We're seeing that alignment on a monthly basis across the NASDAQ, Dow Jones, and the S&P 500. And then on a weekly basis, we are seeing the same thing here. So as you can see here, let me fix this one because it's on the NASDAQ to the NASDAQ for us. Here on the NASDAQ and the S&P 500, you're seeing very similar things. We got the 13s a little bit earlier here, but when we have a 13 on something like this for a daily or weekly chart, we expect a move in the next 12 bars. So we've been sitting here kind of consolidating over the last few months. And then in the S&P 500, we just hit our 13 here recently at the beginning of February. And as everyone knows, we've been kind of topping off here. We hit 5,000, went above it, pulled back. And as I'm recording this today on Tuesday, February 20th, we're having a pullback in the S&P 500 as well. So we have a great alignment on the exhaustion indicators from DeMark on Combo and Sequential, highlighting that we are set up right here, right now, for a pause and pullback in the S&P 500, NASDAQ, and Dow Jones. But these aren't the only indicators that are showing me a little caution right now. Now let's go jump over into TradeStation and take a look at what the Willaims indicators, along with the Commitment of a Trader report, is telling us about the S&P 500 and the NASDAQ. All right, let's kick things off by taking a look at the NASDAQ Commitment of Traders report. For those of you that haven't seen my video on how I use the Commitment of Trader report, the blue line is the large fund hedge funds, and commercials are the red line. Green line is small speculators like you and I. And as you can see here, the commercials are sellers of the NASDAQ right now, while the hedge fund community is at their highest level in well over a year, 18 months. And what's really important here to highlight is they've become way too long once again. And when this has happened in the past, it's led to market pullbacks. So on this weekly chart, you can see here, they got too long in August of 2022, and we had a decline. Over here, they got a little too long. A few weeks later, decline. Here, decline. Here, decline. This one wasn't a decline. This one kept going up. That's why we don't use these things all by themselves. But this is a signal that the hedge funds are getting a little offsides. On a valuation perspective, the NASDAQ has been overvalued for well over a month now compared to gold, the US dollar, bonds. As I'm filming this right now, we're having a decline in the market, as I've kind of predicted we're going to have over the next 4 to 8 weeks, and we're starting to see this valuation mismatch moving lower. But as many of you out there know, I am a huge fan of the presidential cycle and seasonals. And this year is a very important year for the presidential cycles. So first, let's take a look at how the NASDAQ reacts on a monthly basis from a seasonal perspective. And so you can see here, we've had this weekly move higher in the NASDAQ just non-stop. But what are we running into right now? Right now is the time of year when we have a decline in the NASDAQ, the S&P 500. In fact, the next 2 to 4 weeks are usually the worst weeks of the first 6 months of the year. This is aligning perfectly with the DeMark indicators, which are highlighting exhaustion. If we take a look at things on a daily basis, you can see right here, right now, is when the market should start rolling over and having a decline until mid-March. Very interesting alignment there. Let's take a quick look at what the seasonals look like on the S&P 500 as well. And so, as I highlighted before, as we're waiting for this to load, there's an important event that happens with the presidential cycle as well, and that is Super Tuesday, which is coming up on March 5th of this year. I do have to say that this year's Super Tuesday is a little different than in the years past, because we all already know who the candidates are for the Democrats and the Republicans. So there's really no big surprises that we're expecting coming out of Super Tuesday. But Super Tuesday is usually a heavy market decline ahead of that date. And you can see that right here on the seasonal chart. Major decline begins, and then right here, guys, is Super Tuesday this year is March 5th. You can see you have a little bit of an update, and then we continue the downtrend again until the end of March, when we start to rally again and we get into our tax time rally in the market. So this is what we need to highlight and remember here is we have DeMark exhaustion signals that are firing off. We have commitments to traders way too long. Hedge funds are way too long on the NASDAQ, which has been our winners for a long time. And seasonally speaking, this is when we have a market rollover. In the fourth year of a presidential cycle, this is when we expect to have a market decline as well. And I think what we're actually going to see here is probably a 5 to 10% pullback in the market. Nothing crazy, but it's something we need to be prepared for so that we have dry powder to buy more stocks. Also, take some short signals if you got them out there going into this market. And then we'll look for buy signals after we get this decline. The more important thing too, as well as I mentioned, is we have NVIDIA earnings coming out this week. And I think that could cause the top in what has been the AI boom in some of these stocks. And we'll see a rollover in profit taking into some of these stocks that have been very hot in the tech industry lately. And we're going to see the broadening out. We are seeing a broadening out into the Russell 2000 and also industrial stocks in the market. So if you've watched this all the way to the end, a little bonus for you. I hope to get a video out. But right now, I think the soybean complex and those charts look so bad that they're good. And hopefully I'll be able to get a video out to give you more details on that in the future. But until the next time, I'm Kevin McCormick. Thank you for watching Just Some Guy Trading. Please leave me feedback in the comments. Let me know how everybody's been. I really have missed everybody, and I'm going to try to get more videos out for you in the future. Thank you.